Financial fraud against small businesses has risen 70% since the pandemic, costing billions annually. Today, we'll explore what this means for lenders and businesses alike on the Commercial Pulse update for March 25th, 2025. Hi everyone, welcome back. The Experian Commercial Pulse report is a bi-weekly report offering a snapshot of the US economy and its impact on small businesses. Inflation in February stood at 2.8%, marking a decline from 3% in January. Core inflation, which excludes food and energy, has also eased, reaching its lowest level since April 2021. The February unemployment rate was 4.1%, holding steady within the 4 to 4.2% range for the 10th consecutive month. Average hourly wages continue to rise, hitting $30.89 per hour. Retail sales saw a modest increase of 0.2% from January, rebounding from a 1.2% decline the previous month. However, year-over-year growth slowed to 3.1%, the lowest level since October 2024. Consumer sentiment fell sharply in early March to 57.9, down from 64.7 in February, and this marks a 27% drop compared to last year, reflecting concerns about inflation, credit conditions, and economic uncertainty. The Federal Reserve held interest rates unchanged at their March meeting, and this indicates the Fed's uncertainty regarding the economic outlook as they cautioned that growth is anticipated to be slower and inflation higher than earlier predictions. So how are these economic shifts affecting small businesses specifically? Let's look at our small business index. The January Experian Small Business Index stands at 41.5, up 1 point from December and down 8.5 points year over year. Now, 41.5 is still considered a normal business environment range. While consumer confidence has dipped, low unemployment and rising wages are helping maintain consumer spending. Rent inflation has eased, mortgage rates have seen a slight dip, and credit conditions are beginning to stabilize, which may encourage some lenders to begin easing credit standards, making funding more available. Now, during the pandemic, e-commerce surged to 16.4% of total retail sales, then slightly declined following the pandemic. But stolen records appearing on the dark web have exploded from 3.8 billion records in 2022 to over 8.8 billion records last year. Fraud is a growing threat to businesses and consumers, and you can see here from this FTC report how it's trending. Experian's data shows that fraud and identity theft rates have risen 70% compared to pre-pandemic levels. Now check out some of these stats. 65% of financial institutions report increased fraud in 2024. 46% of small business loan applications showed signs of first-party fraud. 31% of small businesses encountered fraudulent lenders or scams during the lending process. And fraud losses from AI-driven scams are projected to reach a staggering $40 billion by 2027. 80% of fraud events occur on online or mobile banking platforms, and 64% of institutions plan to increase fraud prevention investments in 2025. Now, despite these risks, there is some positive news. Fraud trends are showing signs of stabilization compared to pandemic-era peaks, and many lenders are adapting with enhanced fraud detection measures. AI-powered analytics are helping financial institutions detect and prevent fraudulent applications more effectively. And organizations are also forming cross-industry partnerships to strengthen fraud prevention strategies. And we have a lot more to our focus on commercial fraud in this week's report. If this is your first time watching and you would like to stay informed, Experian provides a deep well of commercial insights on our Commercial Insights Hub. Be sure to subscribe to our YouTube channel for regular updates, and if what I shared today intrigues you, reach out to your Experian account team to learn how our data and analytics can make meaningful impact in your business. That's it for this update. Remember to stay informed, stay ahead, and keep watching. We'll catch you on the next one.